Hey everybody, Peter Murphy and Chase Clark here with the Buying Tampa Bay podcast. Today, we're continuing our Pro series where we're interviewing some of the people you'll meet on your road to buying and investing in real estate. We've had some great conversations with mortgage brokers and inspectors. And Chase, I would love to have that mortgage broker conversation again now that rates are up like in the mid sevens. That would be a lot of fun.
Yeah, it sure would. But I'm still hoping for that spring fall again, like the 4.5.
Yes, me too. Well, this week we're chatting with Paige Dennis of ABC Dennis Insurance in Lutz. Paige and her team have been working as insurance brokers in the region for more than 2 decades. I'm not going to tell you how much, but she's got tons of experience, lots of perspective to share with us in what I think is one of the most important areas in the housing market right now, especially now that we're just in the aftermath of Hurricane Ian and its devastation. Insurance is on everyone's mind. So, hey, Paige, good to have you with us.
Hi, Peter. Thank you for having me.
Well, it's a real treat, and we've wanted to have you on for a long time. Your experience is legendary, and of course, you've provided great service for me and for lots of my clients. So I'm excited to hear some of what you have to share about your industry with us. Hey, tell us a little bit about yourself and your experience. Give us an elevator pitch.
Okay, I actually originally started as a primary education teacher. So when I approach insurance, education is still kind of my thing. When I work with clients, we've worked with clients originally as a captive agent, meaning we only represented one company. That company fled the state in 2006 and forced us to go to be an independent agent where we represent multiple different companies, which actually is better for the client because you have access to a lot of different options for them. But regardless of who we're representing and when we're selling insurance, we like to make sure that people are understanding what they are purchasing. So education to the consumer is a big part of our agency. We have lots of clients who come and say, I didn't know that. I didn't know what that meant. I didn't know what I had. People buy price and sign a paper, and it's not till after Ian or some other disaster that they actually try to figure out what they have. So our agency is a small family-owned agency. My husband, Brian, is the main agent. And we have actually family members working here. And most of our employees have been here for over 10 years. So we are not a big turnover or small family agency in Lutz. Here to serve you.
Well, that's great. And again, we're so glad to have you on with us this morning because this topic is so important, especially right now in the aftermath of a storm like Ian. And you guys have been around for a while. You've probably seen, natural disasters come through, flood events, hurricanes, hailstorms, the whole 9 yards. And so tell us a little bit about, the history of the insurance market in Florida, because it seems like it's a unique market, much different from what others might experience in other parts of the country.
It is very different. And a lot of people think it all has to do with natural disasters, which is not necessarily the case. While we do suffer hurricanes, sinkholes was a big thing in Florida, which other parts of the country don't have as much. So insurance was greatly affected by Hurricane Andrew. Big at that point. When that came through, that did knock down the insurers that wanted to take on risk in Florida. With that became Citizens. After that happened, Citizens was created in 2002, which Hurricane Andrew was in 1992. So 10 years later, dealing with the aftermath of that, the insurance industry got tighter. People fled, didn't want to insure, reduce their risk, whatever it was. So then the state came in and created a insurer of last resort. So if people couldn't get insurance, you could always go through Citizens. Back then it was called the JUA, Joint Underwriters Association. And that actually used to also have auto insurance as well. That's kind of gone by the wayside, but it is a huge property insurance right now in Florida, as we're again in a tight market. Tight market is not necessarily due to hurricanes, because I did listen to your last podcast when you were mentioning about what's going to happen now. We have another disaster. Insurance rates are going to be increased because of this disaster. Not necessarily so because of this disaster. The market was fragile already due to mostly abuse of the system. And that's what we have in Florida. That is the root cause of the insurance in Florida, and why you see a difference with other states is the ability for attorneys to abuse the system of insurance for clients. And that's what makes a difference in our rates and everyone else's. That's not just for home insurance, that's auto insurance.
So Paige, I'm sorry to interrupt, but that's fascinating to me. So are you saying that in other states, attorneys don't have the ability to abuse the marketplace in the way they do in Florida?
Correct. There's definitely a difference. If you just drive through another state, how many attorney billboards do you see in other states versus our state? And it's because of the reform. There's no limits on attorneys' fees like there are in other areas. I'll just give you a prime example. An insurer told us this story, that there was roof claim, $30,000 roof claim tops. The insurance company was fighting back on what they wanted to pay, what should be paid. So the client got an attorney. The settlement was $30,000 for the roof. The attorney's fees was $750,000. So that being awarded $750,000 for attorney's fees, where do we all think that's going to get paid? It's going to go back to every other consumer is going to have to foot that bill.
Well, in the debate this week, I think in the governor debate, DeSantis mentioned this statistic about we have 8%, I think, of the national insurance claims, but 80% of the national litigation against insurance companies. It's really out of control.
It is. And I don't know the actual time frame. This was obviously years past, last couple of years, $15 billion in property claims. Obviously no big hurricane stuff in that. And $13.5 billion going to attorneys of that $15 billion property claims.
That's amazing. So you're saying that other states have some kind of a tort reform in place already that prevents attorneys from making the kind of money they're making in Florida.
Correct.
And that is the primary driver of, the fragile insurance market, as you labeled it.
Correct. Because where we're at now, 5 years ago when the roof claims started, for everybody had hail damage. And I get we have had hail in Florida, but our hail is not like the Midwest hail or, anywhere where they actually have softball size hail. Our gumball size hail that doesn't, damage anything but that roof, paid out a lot of roofs were paid for that. And it was due to attorneys, and the insurance got to where they can't fight it. They can't fight it because of the attorney's fees. So there's no, so they end up paying on things that probably shouldn't have been paid on. But
my friend is an insurance adjuster, and he goes on roofs all the time and encounters public adjusters out there or roofers who have these little metal sticks that they get on the roof with and poke divots in the shingles to try and replicate hail. And a lot of the training that he's undergone as an adjuster is how to identify this, how to identify false hail. It's just part of the fraud they're perpetrating, to get some of these roofs done that really, are just old and need to be replaced anyway and have nothing to do with a natural disaster.
Correct.
So I feel so naive in this because all I've heard for the last 10 or so years is the importance of making sure that other insurers come to Florida and expanding the insurance pool, and how negatively it's impacting everything to have pretty much just Citizens and a couple other like hangers on insuring. And it seems to me that this problem could be resolved significantly by some kind of a tort reform. And we've got 49 other states that seem to be doing that effectively, that seem to have more natural disasters than we do in Florida. I mean, how anyone can do business in California when you've got fires and earthquakes and riots all the time is amazing to me. Yet it seems, is that too much of a generalization for what's going on in California?
It's totally accurate. Totally accurate.
I know, right? So, well, the point is, why don't we just do that?
Well, that would require our legislature, who many of them are attorneys and their base thing, to change that. And we haven't made it through. It hasn't been able to get through. Trust me, the insurance companies and the FAIA, Florida Association of Independent Agents, there are people on our side, fighting for that. But until you can win, it's not gonna change. And unfortunately, the vast majority of consumers just see it as the insurance is the bad, it's the bad guy. And you hear it on attorneys' commercials, we'll fight the big bad insurance company for you. But when insurance is used properly, it's, insurance is for the one-time event or the, two-time event in your life. Most people are not making more than one insurance claim in their life on their property, on their home. Cars, that's a whole different thing. But on your property, on your home, most people, how many people do you know that have had 2 house fires? I don't know anybody. You have one, and then you're very, very careful that you don't have that again because it's so devastating. And that's when an insurance company can come in and take care of it and do what they're supposed to do. Or the hurricane, situation, thankfully we've been blessed in this area that we haven't had that hit, whether it was from the Indian mounds or whatever, but we don't have that hit. And we haven't seen total devastation like they're seeing in Fort Myers. But, those people, the insurance companies, we have feed through all of ours that, they're on the ground, they're in the parking lots, they're out writing checks, doing what they're supposed to do and how the policies are supposed to operate.
So let me ask you this one follow-up to that, because in the last legislative session in Florida, we did have some kind of insurance reform that was passed. And I don't remember all the details of that. I know that some of it had to do with roof claims and roof coverages and the ability to split out coverage for roofs. What else was involved with that? And do you think that's really going to make any kind of an impact on rates that we see now?
So in regards to the roof, that's been the big player. That's the big thing right now that is bleeding insurance companies are the roofs. So that is where the reform needs to be made at this point. Anytime that reform is made, one, it takes a few years for that to be the benefits of that to be seen. And this is the reason why, because you have a policy that you bought on January 1st, and this change is made in July. By the time the companies even have the ability to revise their policies or anything like that, it takes a few times. And then, your policy may renew prior to that even being implemented. And so then you have to go another year because you cannot change a policy midstream. A home insurance company cannot change their rules in the middle of a policy period. Now, when you get your renewal and you get that whole big packet, the very top pages generally these are the things that have changed in your policy. And that's when it's going to take. And so what has changed has been the ability to schedule out roof payments. So if you do have the 20-year-old roof on your house is going to have, your policy is going to have insurance at actual cash value or a roof payment schedule. And that schedule really only applies to wind and hail claims. So if your house burns down, they're not going to prorate your roof because you had, an 18-year-old roof. But if it's a wind or hail claim, they're going to prorate it. And the prorations that I've seen for standard shingle roof, the lowest they ever pay is 25%. And even if it's, 28 years old, they're still paying 25% of that roof. But like I said, none of that is going to go into, it's not going to take immediate effect. We do have companies that have already implemented that, that endorsement on their policies going forward. But one, it's not required by the companies. And the other reason is, the other thing right now is for new business, the discount that people get for taking that endorsement. Let's say you have a brand new roof and you want to just take that endorsement. Your premium's not going to go down significantly enough that you're going to say, I'll take on that risk. So there's got to be some rating changes as well for that to actually make a difference.
We'll be back after a quick break.
You hear a lot about supply chains these days because if the past couple years have taught us anything, it's that an efficient, well-managed supply chain is absolutely critical to keeping businesses successful and consumers happy. I'm Will Haywood, and I host a podcast called All Business, No Boundaries, where we talk about supply chains, how they work, what happens when they don't, and the innovations that are redefining what's possible in the world of logistics. Listen and subscribe wherever you get your podcasts.
Well, so give us a quick overview of where we are right now in the insurance market in Tampa. So where are prices going? Maybe you already told us why they're going that way, but where are prices going? Talk about like the shortage of writers of policies, and then describe the effects of something like Hurricane Ian, right? In a market like Tampa. For all of our listeners who are buying in Florida, want to buy in Florida, own already, and are getting ready to face their insurance renewal bills, what will that look like for them?
Right. Okay. So your insurance renewal bill is going up. Everybody needs to just accept that. Some people are doubling. Some people are getting a, 20% increase, but definitely up to doubling. And a lot of the factors that go into that are the factors of your home: older roofs, construction, location, all of those things affect your rates. So the one thing I have not seen, I think I had one client who in the past few months, because we watch our renewals, I had one client who actually went down. I mean, granted, he went down, $10, but I had to call him and say, listen, you are the lucky guy. You are the only person I've seen that went down. No one else goes down.
Did he rebuild his house?
No, I tell you one thing that did affect it is credit. A lot of insurance companies will use your credit score to also tier you in their it's not truly a credit score, it's an insurance score, so it's also going to take into account past claims. You're a big claimer, your insurance score, like to take you on as a risk, is higher than somebody who has no claims in their history. But yeah, so he's just a good client. So rates are going up. Second thing, yes, no one is wanting to write. It is very, very strict underwriting at this point for all companies, including Citizens. In the past, you would be able to purchase a property that maybe had a few deficiencies that in the first, I'm going to fix it in the first 30 days. We're good to go. Those days are gone. Roofs, they're looking to be under 15 years old for most. Some companies will only do a 1-year-old roof. Citizens will still do under 25 on the roof. However, you still have to get all of the other criteria in order to get that policy. So the underwriting's very, very tight. Some companies still have not opened up. Like when a hurricane enters the box, it shuts down insurance writing. So in the boxes, latitudes and longitudes that, hey, this is going to hit Florida somewhere. Doesn't even have to hit our area, and all the states shuts down writing insurance. Since Ian, entered, we still have a few companies that have not reopened, or they haven't reopened in all areas. Understandably south, but we even have some that didn't open, Hillsborough, Pasco, Pinellas, until recently. So everybody is evaluating their losses. to see where they stand. Because if you've watched the market at all, we've had 6 companies, probably more than that, but 6 that I know of that actually went out of business this year. Those companies were deemed insolvent by the insurance commissioner. So the insurance commissioner kind of regulates to make sure that people, when they're buying policies, they have a company that's going to be there for them after the storm. But there were 6 companies that prior to June had already gone under, and they did massive cancellations. Like everybody canceled on April 13th, May 29th, June 29th, July 15th. Whole books of business were being canceled. And that created a flooding of Citizens, which is the state insurance, which we are Citizens. Everyone needs to understand, when you're saying Citizens, that means you and me. We're all funding that. You'll look if you just go check your auto renewal, or if you own a boat, you look at the bottom and you'll see a little surcharge and a tax that is going to help fund that. So with all the companies going out of business, and those were going out prior to the storm because of the roof disaster. That's why I say, when people think it's the storms, it's not the storms. It's the abuse of the system.
So a couple of questions related to that, specifically about Citizens being, we've always heard of Citizens, the insurer of last resort, right? But over the past 12 months, I've received policy quotes from Citizens that are cheaper than some of the non-public, the private writers, right? So like, the American Integrities, the Tower Hills, all that. So I've received cheaper quotes with Citizens, which didn't really make sense to me, that the insurer of last resort would be cheaper. And then the follow-up to that would be, is it true that if you have a property that passes a 4-point inspection, and maybe we need to talk a little bit about what a 4-point is, will Citizens automatically insure that property for you if that's the only carrier that will look at that property?
Okay. So in regards to the price of Citizens being cheaper, what is causing that to be is legislation that has limited rate increases. So on our side, when I'm writing a Citizens policy, which, prior to the last year, I probably wrote 10 policies in the last, 8 to 10 years prior to last year. We didn't use Citizens. We had options. Now we have written a lot of Citizens. But on my side, when I see it, when I rate a policy, you have the allowed rate, and then you have the true rate. But because Citizens is limited in the amount of rate increase by the government has put in place that they can only go up 10%. You may see a premium. I'll see a premium that says the rate that we're going to give the client is $2,300, but the actual rate, what this should be rated at, is $5,400. So in one case, that's great for the consumer, but in another case, that just leaves the company short. And what's going to happen is eventually assessments will be made, and we'll pay for that because they're not charging true rate. So that's why the rates are less. In regards to the 4-point inspection, will Citizens automatically take a clean 4-point? That is a trick question. So yes, if all other factors are true, it will. So part of that has to do with, what is the house? They generally they'll take the things no one else takes. They take the log homes, they take the crawl spaces, they take the unusual construction, they take the things like that. But what also factors in that has never really factored in before is your history. So it does ask, they do loss runs. You can only they're not taking everybody who's had 5 claims. They're not doing it. There are limitations that did not used to exist on Citizens. The house that's had 3 water claims in the last 3 years, not taking it. I mean, there's just different guidelines like that. But overall, they're going to take it.
Maybe tell us a little bit more about 4-point inspections. What are the 4 points of a 4-point? And why do the insurance companies want this inspection done?
Okay. So the 4 points of the 4-point are the roof, the electrical, the AC, and the plumbing. And the whole point of looking at those 4 things are the indicators of where claims come from. So obviously roof. They want the roof to be in good shape, no deficiencies. And if you look at a 4-point, for all you investors out there, when you get that 4-point inspection, I know that inspectors will put, years life. It's got 3 years life left, which is what Citizens requires, that it has 3 years life left. That's hard to say. They also put on beneath it deficiency. So even though they mark 3 years life left, if there's anything marked in that deficiency category, it's ineligible because they won't take it. You have to have those things repaired prior to insuring it. And like I said, right now in this market, you just don't have people who will do it. So the roof is for, obviously making sure that that's good. Plumbing, water leaks, that's a whole nother area of abuse. But so they want to make sure the plumbing, there's different types of plumbing that are ineligible. There are different, they want to make sure it's not leaking. So that plumbing, obviously another place where home insurance claims come from. AC, everybody wonders why the AC, what has to do with the AC? And the AC, not many companies will just eliminate you because of the air condition, but some of them require it to be less than 20 years old. And the whole point of ACs, the most AC claim you get is obviously a pan overflowing. And again, that goes back to water. And then electrical. So electrical can be a big issue. There are electrical panels that are ineligible. There's wiring that is ineligible. And so those factors, because those are fire hazards, are something that insurance companies are looking at.
And we're talking like standard Pacific panels,
Yeah,
we
Federal
want
Pacific.
Federal Pacific. That's right. Federal Pacific. We want the square D. We don't want knob and tube wiring. We want the 3-prong outlets, not the 2-prong,
Actually, nobody gives you a hard problem on the 2-prong.
Really?
They do not, but aluminum wiring is the bad thing. So, knob and I haven't seen a knob and tube in very, very long time. Cloth covered wiring, depending, some people automatically freak out over cloth covered wiring. And that was because it was originally with knob and tube, but there's also some cloth covered copper wiring that is rubber insulated, and Citizens will take that. Not all companies will. I've had a few other companies who will, with a little push, take it. This was before, but they would take it. But yes, Federal Pacific,
Zinsco. That's one I've been burnt on a few times.
So if you see a beautiful colored panel, when you open that electrical panel, and it's so pretty with all the different color breakers, that's a no good. So you want black breakers, and you want, so Zinsco Challenger is another one. So
I like the breakers that have the little screw-in light bulb looking fuses. Those are great. We had a few properties with that back in the day.
Yeah, we don't even touch fuses anymore, so you're in real trouble with the fuses.
Yeah, these are some old features. I mean, so I don't know if you know this about me, guys, but I was actually an insurance underwriter for my first job. And we did it on the health and welfare side of, health benefits, right? For companies who wanted to self-insure. And as an actuary of this, all of this was mathematical, right? So we were able to put in the actual costs of loss, potential loss, and potential exposure. And through a series of complex assessments, we got to a rate that we would have to charge for health insurance, right? And you would look at your experience after you did that for a year, and you would say, yeah, we were right on with our analysis. And sometimes you're like, yeah, our analysis more than covered the cost of our claims, so we charged the right premiums to people. But sometimes you look at it and say, no, we didn't evaluate for all the risk appropriately enough, and so our rate should have been higher, and now we're gonna have a really high rate this year. All of this that I'm hearing is just actuarial analysis. why is it that a company would why is it that Citizens is bearing all this risk? It seems like any company could go and do the actuarial analysis of what it will cost to insure in Florida and offer insurance here. Why is it so problematic for them to simply do that kind of analysis and say, this is what our rates need to be? And if we charge this rate, then we'll sell insurance all day in Florida because we're making enough in our rates to cover our risk for loss. Why would it not be that simple? What am I missing, Chase? You can probably see some big hole in my reasoning.
Well, mathematically speaking, I think that point makes sense because, if Governor DeSantis has the right number and he said Florida has 8% of the national real estate claims, that's far below what we should have. We're the third largest state in the union. We should have well more than 8% of the total claims in the country, I would think, based on our population. And so we're actually a less risky state than some, I would think, based on that number alone. It's got to have something to do with these attorneys and, the actual paid out amount being so much higher than it is in other states that control the amount of attorney's fees that go out for a simple roof claim or a simple water claim.
Yeah. So therefore, it makes sense to me to say that this must change. And every legislature who's also an attorney, right, understands that fundamentally too, right? This can't continue because there certainly will be no insurance options in Florida. And they're going to want insurance to insure their multi-million dollar beachfront houses, right? So they're not going to want that problem. They know that they're the culprits for this problem. So I have to imagine that there will never get to be a time, Paige, in Florida where you can't purchase insurance. Well, eventually the legislature will say, okay, we had our run. It was a nice one. Now let's do some tort reform.
I think that I'm praying that will come. But what happens in the meantime, I'll just give you examples. Sinkhole. Sinkhole was an area that was abused. So prior to 2007, every policy that you bought in Florida, if you bought through a standard market carrier, covered sinkhole. And, we did have some sinkholes in Florida, and we had, in especially Pasco County, a lot of repairs were done. Well, then it got to be, this was the great way to pay off your home. And so, because who's to say, is it a sinkhole? Isn't it a sinkhole? I'm not really sure. So we actually had to go through a redefining of what a sinkhole is, and, actually define it other than the big hole that falls in the ground and swallows the house. And so that is catastrophic ground collapse. Sinkhole is just unraveling of the soil and all these things. And what happened was, that is where, when you first saw the exodus of insurers. In my introduction, I talked to you that we were originally a captive agent, and it just happened to coincide with years where we had 3 storms in a row. But if you go back and look at insurance in Florida, it was because of the sinkholes that all these companies were leaving, not because of the 3 years that we had multiple storms. Because in 2006, our company was one of the first to leave. And they said, we're done. But then that's when all the national companies left as well. State Farm, they're all writing now, but they all created their own Florida company, just a Florida company. So the problem is that the sinkhole, what we ended up doing, how we reformed it, we didn't just do tort reform and say attorneys can't go after these. We changed the policy. We removed the coverage. So what you're going to see, probably instead of any tort reform, you're going to see stripped policies that cover less and less and less. We already have it. The sinkhole is no longer covered unless it is the catastrophic ground collapse. Roofs are now going to be scheduled to where, it's an actual cash value payment, or you're on a roof schedule payment. Water damage is limited. That's another one that is already been abused as well. Every broken pipe needs an entirely remodeled kitchen or bathroom, so water damage is now limited. I had someone who is not in the insurance industry tell me, and I could see this one went and came, it was mold is gold. So if you had mold, that was the whole saying, mold is gold. You got it, you're going to make a bunch. Well, that's also limited on policies. So what we're going to see is less and less coverage on these policies. Now we'll still have policies, but they're going to cover less and less.
Yeah, it's interesting. I actually just had a slab leak at my house a few months ago, and it was a tiny leak. Thankfully, I didn't have any water intrusion into the house. It wasn't a flooding event, but I came home from vacation and my floor in my kitchen was red hot. It was the hot water line. The floor temperature was 105 degrees.
Oh, wow.
Yeah, they came out with a thermometer and 105 degrees on the floor. So I call my insurance carrier. Actually, I called my agent. I didn't call the carrier because you don't want to call the carrier, right? Never call the carrier.
Got that right.
They put that down as a claim, even if it's like a friendly phone call, right?
Yes.
But I called the agent and I said, "Hey, what can I do about this?" And they're like, "Well, that's technically not covered. It's not an act of God. It's not a natural disaster. It's considered wear and tear or failure of a component of the house, you know." And she said, "However, if you hire a lawyer and fight this, if your damage is great enough, you'll probably win." And I'm like, wow, how is that possible?
Yeah, it's possible because they don't want to pay those attorney's fees.
I know, isn't that crazy? I mean, it's like it's really a game, right?
Mm-hmm.
And I have come to find, and this is just my opinion, but whether we're talking about health insurance or property insurance, it's like the logic has gone out the window a little bit in lieu of, you know, how can we sweep this under the rug, get it gone for the least amount of cost, right? I mean, that's the name of the game. And, you know, they're charging you extraordinary premiums, whether it's health or property or car insurance, because of the abuse out there that you'll probably never take advantage of or receive any benefit from these huge premiums you're having to pay now to cover everyone else's litigation that they're doing.
Correct.
Such an unfortunate situation, but it's the reality that we live in here in this state right now.
Well, given that reality, Paige, what is your experience with people that are choosing not to insure? Do you have much experience with investors, with homeowners that are saying, I'm not going to pay $5,000 a year for homeowners insurance. I'd rather just keep that money in my pocket and pay for the eventual issue that I'll have down the road, hoping that I'll save enough in premiums to cover the potential loss?
Yes, we do have clients on that side. I also have an investor. I have investors that one of the questions we were going to talk about was in options for investors. I have a company that Reinsure Pro, which is an investor company. Unfortunately, they, like everyone else, have stopped writing in Florida. And they were a company that was perfect for the investor to take on some of the insurance risk themselves, because you can insure it at a much lower cost, replacement cost, you know, and say, I'm going to take on that cost, but you'd still get that replacement cost payout based on the amount you were insuring for. But people, if they were trying to reduce, we do have people who self-insure and they just say, you know what, my portfolio is big enough. If I lose one house, what I'm gaining from all the other houses will outweigh paying these premiums. Now, that typically they purchase liability policies and just don't insure the property. But I do have people who do that. The other thing people do, homeowners, just a standard homeowner, what they'll do is they'll reduce their policy. They'll strip it out. They won't cover their stuff. They won't cover the personal property. They'll remove the personal property replacement cost on their contents. They'll increase their deductibles, where they're taking on more of the risk just to lower that premium.
Yeah, that's smart stuff. And, you know, I can speak from an investor standpoint. You know, we love Reinsure Pro. NREIG, I think, is what the parent company or what it started out as. And the flexibility and the common sense approach that they take to insurance is something that we had never seen before. You know, where you were locked into insuring something for a certain value because that's what the actuary said it was worth. And that was it. Take it or leave it. And that, with the flexibility of paying monthly and all this kind of stuff that they brought to the table for investors, it's really unfortunate that option is currently on lockdown because of the exposure they now have in Florida.
Well, Reinsure Pro is also just a little bit of information is they are like other companies, they're an excess and surplus carrier. So when we're talking about people in the standard market companies, when they come in and insure in Florida, they go through that insurance commission. They have to, if they are doing a rate increase, and I know people get really upset, but the only way they get a rate increase approved is to show the loss that they've taken and that they need to increase those rates, like what Peter was going through at the end of his year, saying, hey, we need to increase these rates because it's not sustainable. So standard carriers, we call them admitted carriers, they have to go through that process. An excess and surplus carrier does not. They're admitted to write in Florida, but they're not, I can't think of the right word, but they're allowed to write business in Florida, but they are not required to get their rates approved. If they want to make a change in the policy, like going to the roof schedule, they don't have to get any of that approved. They're the surplus lines. And it shows you how bad our state is at this point, that even those excess and surplus carriers are not writing. And they're, we write through TAPCO, which is a broker that writes. I tried to call them the other day for a DP1 for someone, and nope, we don't have anything in Florida right now. I mean, so that just shows how bad we are off, because even they're having to pay out, even though, they're even getting hit with the roof situation. And that all started, everybody stopped writing prior to Ian. Those E&S carriers stopped writing prior to Ian. This is not an Ian issue.
So you mentioned briefly there about DP1. So a lot of investors like the DP1 versus what the DP3 is. That what the other one is, if I remember right?
Yep.
Yeah, tell us a little bit about the difference between those two policies.
Sure. The DP3 policy is written on, it's called a broad form policy. So it's written, the wording in the policy is, we insure for every peril except, and then it gives you a list of exceptions of things they're not going to cover. So it's very broad. As long as it's not in that exclusion list, it's covered. The DP1 policy is it's called a basic form policy. And I actually printed out so I make sure I get them all. Although most of them, the main things we are cared about: fire, lightning, internal explosion, windstorm or hail, riot, aircraft, vehicle smoke, volcanic eruption, vandalism, and malicious mischief. Now you have to add on the vandalism and malicious mischief because that's excluded generally, but most of them will allow you to add that back on. But that's all it covers. Yep. So if it doesn't fall into that, it's not covered. So the big thing, I don't know if you caught, the big missing piece in that was water.
Yeah.
No water coverage. So
and can you put a rider on a DP1 for water backup?
Some you can.
Yeah.
Some they won't necessarily give you water backup, which water backup is that's generally just like a $5,000 amount they'll give you for pipes coming in, but broken pipe, accidental discharge of water, they will limit it to $10,000 if they allow you to put that on.
Yeah.
I just want to talk through something in concept, Chase. In our experience of managing properties and owning investments, think back with me now how many insurance claims we've had over the last 20 years. And we've had lots of damage, lots of water backup, lots of electrical problems, lots of things that have happened to properties. But how many times have we needed to call on our insurance?
I think we've that I can recall since 2004. And one of them was that flooding event, which I don't even think we had coverage for on 15th Street, which was a failure of the city of Tampa's stormwater system. And then another one, which is funny, we filed under a sinkhole claim because we had that settlement issue down in Ybor City from all the road construction that was going on right next to our property. Basically, they came in, tore the roads up, jackhammered everything, and we had an old frame building sitting on pilings, and it caused it to shift significantly so that the back of the house was like 18 inches below the other corner. It was really crazy. And so that may be the only claim I can remember actually paying out.
Yes. Yeah, I think so, because the water one didn't pay out. That settlement one did because of the related activity. And I'm just thinking this through, and I'm thinking this through for some of our clients, and I can think of so few instances where it has made sense for them to go ahead and file a claim with their insurance companies, that it would seem to me that mathematically we could make a really good case for why an investor with a reasonably good amount of product, even an investor with not all that much product, would self-insure this kind of stuff. Just with the low eventuality of catastrophic loss to your property that you cannot afford out of pocket to pay for. It just seems like this might not be an equation that adds up all that well.
Well, that's why I think our experience has been is we love these excess and surplus line carriers, because we can decide how much risk we want to take on in our portfolio. And our portfolio is of a substantial enough size that it makes sense to do that. And I think Paige mentioned that strategy earlier, because that's a smart thing for investors to do. Now, the problem you run into is your bank, right? Your bank is going to require you to have certain coverages. And I remember we had a 100-year-old building down in Ybor City that they wanted wind coverage on, because we had a loan on it with a local bank. And the wind coverage alone was $3,800 a year. And the likelihood of that thing blowing down, since it had been there for 100 years and gone through all these storms, was like 0 to none. It wasn't going to blow down. So, that's the kind of stuff you run into if you've got financing and you're constrained by what the bank wants to see on a property.
That's correct, as far as the financing and making sure if your bank will allow you to do the DP1. Some do, some don't. Also, I've seen with some investors who have basically they have multiple properties in on a loan. They're not as picky, at least the banks I've dealt with. They're not as picky on that value of the insurance. They'll take the lower value, as they just want to make sure that it's insured, because typically an investor is picking up these properties at a much less cost. And so in their mind is like, what I have into this, like, let's say, is only 100,000, even though it's worth, 200. I don't want to insure 200. I just want to make sure I'm going to get my money back if I need it. And so that's where the Reinsure Pro was a great resource. And I am praying that they're going to come back, or even TAPCO or any of those, because you named that value. And then if your lender is good with it, which most of them have been, if you're on a big, portfolio situation, it's the individual investor is going to be stuck with typically getting a DP3 policy at replacement cost and having that higher rate for the insurance.
Yeah. So while we're talking about investors right now, are there any other strategies that investors can use to help reduce the cost of insurance on their portfolios? I know in our case, sometimes it makes sense for us to split out the liability and the hazard coverage and have like a liability umbrella separate from the DP1s that we have. Are there any other strategies like that investors can use to help save money?
If they're wanting to insure that property, having it, the big thing, one thing, if you're have an older home, is make sure that those wind mitigation credits are up. That's a big credit. I don't know if people are familiar with Third Nail. We use thirdnail.com, but anybody who will, if you have an older home that doesn't have hurricane straps or clips, that's going to reduce your premium. It's not going to reduce your coverage. It's going to reduce your premium for that house, for that wind coverage. Those types of things, having it up to date is going to help it. But as far as any other strategy of separating it out, typically we're separating that liability coverage when we have to, because typically a lot of times it'll be more expensive. And the reason that you have to do it is the house is owned in an entity, and the company doesn't allow the liability for the entity on the property policy. So sometimes that can But if you have multiple, then it does become cost effective, because adding those extra properties onto that liability policy it's not as expensive as that one. If you have just one house and you have to buy those separate policies, it's definitely going to be more expensive for you. But the more houses you have, that liability policy becomes more and more cost effective.
Well, good stuff. Listen, you know that we're all about buying Tampa Bay, so housing market issues are significant to us. This is your chance to prognosticate, right? And we won't hold you accountable for anything you say here. But what do you think? How do you think all of this affects the housing market in general? Are there any correlations you're aware of insurance as it relates to housing markets? And does the housing market correction that everyone's fearing right now, is it accelerated because of the insurance debacle we're in? Or does insurance kind of just stand aside and not really have much of an impact? What are your theories?
I think that it does have an impact, because it reduces, the higher the insurance goes, it reduces the amount people can afford, because all of that is factored in when someone's going to purchase a home, and the, income to debt ratio and all of that has to be factored in, whether that, people will qualify for a property, and then they get that insurance cost factored in, and it's like, oops, we can't afford this. We can't afford this, especially with the interest rates increasing. So I think that it is definitely going to affect it, because I think that the more and more tight the market gets, and the premiums are not, that we have no relief in sight right now, it is going to affect the ability for just the average consumer to be able to purchase property, which might increase the ability for investors to take control of some properties.
Yeah,
one last
especially if they're not.
thing I'd like to ask you related to Tampa Bay and maybe Florida in general is, there's this constant push for green energy. And so solar has become a hot button thing, right? And if you're like me or a lot of other people I know, you're getting flyers in the mail, you're getting phone calls, you're getting emails constantly from solar companies saying, hey, let us put panels on your roof. And I have a solar system at my house, and I love it. It was heavily subsidized by the government back in 2013 when they were paying significant portions of the cost of putting solar on your house. And I have recently, in the past 2 years, run into problems with getting insurance now. It wasn't a problem for the first 8 years that I owned the house. And now all of a sudden, carriers are telling me, oh, fantastic, you've got solar, go find another carrier. We're not doing that. First of all, so why is that? Number one, because this is going to impact a lot of people, I think, as more and more people put solar on their homes. And so why do these carriers not like that?
Okay, so first of all, insurance is reactive. And just so you know, I try to explain to people, they don't make these things up. They're coming up with these rules because of past history. So that first, what would that be? 8 years of your existence with solar, great. Now they're seeing that what's the very first thing damaged in a windstorm? What's blowing off your roof? Solar panels. What's the cost of those solar panels to replace? Not cheap. The other thing is, I don't know if you have the net metering where you're selling the electricity back. And so typically they want $1 million policy for that, because obviously people have been killed by that. Because what happens is you have all these homes just sending their electricity back, and line workers going out there. If something's not working quite right and they get zapped, and unfortunately someone loses their life, they want to be able to come back to you, if it was your house was the cause, to pay for that, because they're definitely getting hit with that. So the cost of the panels, the damage they cause to roofs if they get blown off, and that's really why you're seeing fewer and fewer and fewer companies taking those solar panels.
So 2 things real quick about that, because those are the arguments I've heard from people. You read them online. With my particular system that was installed in 2013, I have an agreement with Tampa Electric that is a hold harmless agreement that is also backed up by a policy that Tampa Electric holds, that if any damage were to occur to their equipment or to their workers, I'm not liable whatsoever, right? Mm-hmm. So when they tell me about line workers getting power pushed back to them and injured, I'm like, well, Tampa Electric wanted me to have this solar system. They wanted me to sell power back to them. They put this meter in that sends the power back to them, and now they're covering me with this hold harmless agreement. And then the second thing is that, my panels are guaranteed by my company to withstand 150 mile an hour winds. Where I live, I will probably never see 150 mile an hour winds in my life, 30 plus miles from the coast. So the odds of them blowing off and me putting a claim in, probably really small. But also they don't give me the ability to exclude my panels from the policy, which is interesting. So just curious about any of those things.
As far as the liability, the fact that the clients that I have had, it's the panel company putting those on, they have to get that liability prior to them even getting the panels. So I'm not sure where that contract has changed, or if it depends on who's putting the panels on, or because yours were maybe grandfathered into a program that they realize is not cost effective for Tampa Electric. I'm not sure, but I've had clients who have called when they're getting those panels installed and said, this is what we are required to provide. So where that comes from, I'm not sure. I just know that we've been asked to provide it for people. And in regards to the panels not blowing off and things like that, my guess is they're not going to differentiate. They're going to make a general policy. So the homes on the coast that it is going to blow off, they're not going to take on that risk because the panels are not cheap. And I know, they're going to make we don't have policies that say this section, especially because Hillsborough does go all the way to the coast in areas. They're not going to, they may say inland counties can have this, but coastal counties, which were considered coastal, would not. They're not going to say only if you're within 2 miles of the coast, you can have panels. And, they're not going to make that rule. They're going to, insurance likes nice little neat boxes. And if it doesn't fit in the box, then they don't want you. There are companies that are allowed, that will write it, and they are excluding the panels. It's just right now, they're probably not writing. But
well, yeah, that's interesting because I wasn't able to find. I found one carrier in the entire state of Florida that would write insurance for me because of my panels. It was Frontline actually. It was the only company I could find that would write with panels, and so I was one of those people that was fortunate enough to get my premium doubled this year. So just and another reason to bring this up is just for those of you that are homeowners or investors out there thinking about putting solar on your house, just be aware, like this is an issue right now. And until they get it figured out and more markets open up for homes with solar, you need to be aware that you could run into this issue and you could be paying much higher premiums because you have a solar system.
Absolutely.
Good stuff, Chase. And that's good. That's a good advice. And, Chase, if anything we know about you is that you don't fit into a box. So we can't even hope to get your insurance rates normalized in the years ahead. You are out of luck, my friend.
I'm a risk all into myself.
You are. There's a whole category, right, of Chase, right? So, Paige, this has been just a great conversation. I mean, really frustrating in some ways and really eye-opening in others. But you're a wealth of information, and it's been great to have you on the program today. Thanks for sharing all that. Where can people go to learn more about ABC Dennis?
We have a website, abcdennisinsurance.com, or you can stop by our office. We still take in-person customers. And 813-949-7765. Give us a call.
Beautiful. Well, thank you so much for all of that. Chase, it's been a blast as always. Listeners, we look forward to our next episode. We'll be back in your ear in about a week. Until then, sayonara, guys.
Thank you, Paige.
Thank you.